What's up, YouTube? Welcome to my channel. In this channel, we cover stock market technical analysis. We try to make money on stock moves that are going to happen in the future, anticipating where stocks are going to go, and not just where things have gone in the past. We don't always jump on board kind of the herd trade. We look for, a lot of the time I'm looking for the counter trade and looking for the signs that the counter trade's going to take place. We don't take counter trend trades just at any point. We look for the signs and the triggers. So in this video, though, what I want to talk about, there's not a whole lot that's been happening this week. We've just been kind of grinding higher on super low volume holiday week kind of action. There's nothing really to learn from the action of this week or the direction, just because it's low volume. And you got a lot of market participants that are just on vacation. So you don't have consensus. When you don't have consensus, you can't trust the market action. But what I want to point out in this video is the reason why what I'm seeing, the signs that I'm seeing in the stock market are why I don't believe this breakout essentially that we've had. And we have had a breakout. In the markets, we have had, the markets are moving higher, but there's just a lot of things that just don't look right to me. And one of the reasons why I don't believe the breakout. What I want to point out to you is we're going to move over to this Apple chart so I can really just outline my point, and then we can look at the SPY and the Qs and we'll wrap. So what I want you to understand is when you have a trend, when you have a market trend that's intact, you would expect to see that trend. Once you have enough confirmations along the trend line, you'd expect to see reactions around that trend line because the markets confirm that it's watching that level or that trend. And when you zoom into Apple, we've got this black line here on the daily chart. This is your bull market trend line. And I want everyone to just focus on kind of the price action that we've seen in the last, really the last year. And this will highlight the point that I'm trying to make. We had a breakdown right here of the trend line. If I zoom in a little bit more, you can see here's your candle where we really started to break. And, we had a nice close below that trend that day. And that was a break on the daily chart. The very next day, we gapped down, and we were gapping down way below trend, and we sold off and held down below that trend. What I want you to notice is the volume. This is really the key thing that most people don't look at. They just look at price action, and they ignore the volume. But oftentimes, you need to understand volume in order to anticipate the move that's coming next. If you don't use volume in your analysis, you're blind. You're kind of looking around the world with one eye open, one eye shut. You don't have a good depth perception. And see the volume right here. See the spike in volume? We had a nice spike. So that basically says when this broke, sellers came in and basically, we sold off, and we had a spike in volume. That confirms that trend line. When you break a major trend line, you'd expect to see trades take place, whether that's stop loss orders being fired or people getting short. People are trading around that level. And you'll notice that basically the next time we hit it right up here, we came up, we gapped up right into that resistance line, and look at the volume. Another spike in volume right there. So you can see the volume was higher that day than all the other days by a substantial amount. And really even leading up into that, we had low volume down here, and we had almost 2.5 times the low volume when we hit that resistance line. So it just goes to confirm that trend line. When you see a major trend line, you want to see volume confirm that. And we saw it again there. And so then if I zoom into other parts of the year, we broke. Okay, so here's the latest reaction around this trend line, and you can see right here, we broke above it, closed above it, but there was no volume. See the volume? There's not a spike. A little bit of an uptick, but really low, pretty low volume. When you see a break, a confirmed break, you usually want to see 1.5 times the volume of the average volume. And we just didn't get that here. And that was followed the very next day by a sell-off. and volume increased on the sell-off. Now again, here's another break right here. Here's a break, and here's a break, and the volume's increased, but it's still not that much volume. It's, if you zoom out and you can see these other reactions, here's that last reaction right here. The volume was up way up here, way up here basically, and you can see that the last break right in this range, the volume is just way down here, basically kind of the average to lower level volume. It just wasn't really that much volume like the last two touches. So when you had the breakdown, you saw the volume spike. When you had the tag of the resistance line, you saw the volume spike. And then when we broke this, there's no volume spike. And that's the point that I'm trying to make, is that I think this breakout fails. And as of right now, I don't have, there's no candlestick or reversal candle or anything to trade off of. So you have to just let it kind of go and watch it. But I think this breakout here is actually a bull trap. And the reason why I say that is the volume. I'm just not seeing it like you would expect. When you see a break, a recovery essentially of a decade-long trend line here, you would expect to see people jumping on board and buying this, and you'd expect to see the volume there. And all we've seen really in this breakout above is a really non-impulsive muddling around, kind of grinding around up here. This to me says that this is a level that institutions are distributing. They're selling basically up here. They're not buying, they're selling. So the big institutions are liquefying their Apple positions, selling into this strength, and the retail traders are potentially buying that. But ultimately, there's selling happening from big institutions. That's what I see, and they're just kind of doing it. They're not selling it all at once. They're selling it as we kind of muddle and grind around up here. I think this creates the bull trap. I think we fail this trend line and actually dip back below and start to head lower. I don't know that for sure, and I don't know when that's going to happen, because I don't have anything in the candle that tells me that I need, it's time to get short or reverse. And ultimately, I would not really be interested in shorting Apple with this chart pattern that we've had until we get a break back down below this trend line. A nice sharp sell-off candle below the trend line with a spike in volume would be a nice confirming price action and volume indicator of a failed breakout basically, and a bull trap. So that's really what I want to point out there on Apple. Volume is key. You really need to keep an eye on that. You can see here, every time here's a tag of the trend line from support. Boom, big spike in volume. See the spikes? Here we tagged it right there. Pretty big spike in volume. So this has confirmed a lot that this trend line is a valid trend line, and this breakout higher, there's no volume spike. So I know a lot of you are probably long Apple and you're making money and it feels like everything's great. But again, in this channel, I'm trying to anticipate the next move, not what it's done. And the move that I see, what this chart tells me across various indicators, is that this has a high probability, this breakout has a very high probability of failing, and this could be a bull trap. Moving on to the SPY here, it's kind of the same thing I want to point out. When on the SPY, it's a little bit different because this is a bunch of stocks, so you can't always expect to see a spike in volume because you might have some stocks hitting their trend lines and others don't, so they might, they're not going to always be volume there. But in this one, again, you don't see any volume on a breakout. And here's your breakout. This is not a believable breakout. And you could take the breakout long because it is a breakout. The trend line's not the strongest trend line. We've got a couple reactions, but we don't have a whole lot of other trend lines to work with. So this is the one that I have right now. We've got a cluster reaction right here, cluster reaction right here, actually two, one and then two. And then again, we had a reaction right here. So we've got a couple reactions. People are looking at this trend line, but look at the breakout. The breakout is the RSI is sitting at 76, so we're extremely overbought, and the breakout is just not impulsive. Look at these candles, these little tiny candles where we're just creeping higher. And the reason, and then look at the volume, decreasing volume right here. Each day, less and less volume as prices move up. So this is not, people are not buying this breakout. There's just no sellers. There's no shorts that are there. And so basically the markets just creep higher because of the lack of sellers. Nobody's selling and just a couple people are buying. There's not a lot of people really, believing in this, but there's a few buyers, the trickle buyers, the 401ks and all that. There's always buyers essentially. And this just trickles higher. Now, if we get a nice impulsive break candle higher with volume, then you can believe this rally or this breakout a lot more. But until we see that, this is just not believable. I think this breakout fails as well. And it probably fails next week. I think we're going to get a nice big red candle down at some point in time, bringing us back below this resistance line, and then we're probably going to sell off some more. But the reason why I say that is because of the volume, decreasing volume, oversold RSI, and non-impulsive candles that are not breaking out impulsively. So that's just another thing to take note of. And that's really it for the video. I just want to point that out. Besides that, there's not a whole lot going on this week. Again, these kinds of weeks, you can't really believe the price action unless you see the volume there and you see people participating in the market. Then it's really a small minority of the market that is moving the indices higher, and you don't actually have consensus. So next week, when everybody kind of comes back from break, we should see market consensus, and they'll either buy this breakout and believe it and ramp us higher, or they'll fade this breakout, and that will give you an understanding of the market consensus and what the market's actually what it's saying. So everybody have a great break, and I will most likely not put out a video on Friday. Unless any news happens, we'll just catch everybody on Monday of next week. Thanks and take care.